second. Okay, there we go. Let's just check on to the attendees at the moment. All right, good one. There we go. Okay, guys. A very good afternoon, evening to some from Malaysia, some part of Southeast Asia. We've got a couple of people from all parts of the world, I guess. So very good afternoon. Thank you for joining this live Geometric Market Outlook. Now, we are planning to organize this live webinar almost every day. For now, it's about 2 to 3 times a week. So it'll be at the moment at 3 p.m. My time here at Cyprus. It's GMT +2, if I'm not mistaken. So we'll just take it that way. It's Cyprus time, 3 p.m. and I'll be online, especially on Mondays and Thursdays. So I'm planning for this geometric patterns analysis, where I will share with you my analysis on several pairs, and of course I welcome you guys to ask questions, share with me what you are trading and what sort of instruments, whether it's gold, currencies, silver, or anything else that are available on the Blackwell platform here, MT4, and we can always take a look at it and share with you ideas on geometric patterns. Okay, so here itself, I just want to share with you on what I see and how I look into the markets. The first thing I do, of course, is to analyze the market by knowing top movers. You know, what moves the market, where investors are for the day when market opens in Japan, in Australia, especially Southeast Asia, before they come into Europe and the US open. Where do these investors put their money, or gives us the signals of trading opportunities. So here, I mean, from top movers itself, as of this morning, we're looking at loads of movers, moving actions on the USD CAD to the upside, as well as the USD CHF. So it's best, I think, in my opinion, over the years of trading, to first understand that we need to pick pairs correctly for the day, because we have got different events for the day. So we've got different movers of the day. We've got investors' interest going into different instruments. They are hedging as well. We've got all the big boys, players, the banks. They've got their interest on different pairs, different day of the week, or different week of the month. Okay, so this is where we are, it's important for us to understand that. So from doing that analysis itself, I'm showing you Euro USD on the 1 hour chart, but I'm just giving you a bit of a rough indicator as of today. As of today, from now on until market closes, we still have got some opportunities on the USD CAD, the USD CHF. Okay, that's mostly on the upside. Now that's based on the 4 hour chart. So we're looking at 4 hour chart and below. We're looking at these pairs as possible opportunities where I will then look into patterns. Apart from that, I will just give you a bit of an idea of three currencies that are on the upside. Ranking from number 1, the US dollar, showing a lot of upside as of today, still has got some room to the upside, but we'll look into that on patterns, and then I will show you what are the areas that we're looking at in terms of the probable reversal zone, stop loss possibilities, and various other factors. So we've got the USD, we've got the Euro and AUD. These are currencies trading to the upside today, from the most strong one, which is USD, to the number 3, AUD. So you've got USD, Euro, AUD, they are trading to the upside, okay, today. And that's based on anything below the 4 hour chart. So from the 1 hour chart or lower time frame right up to about 4 hour chart, we're still seeing some movement to the upside for USD, Euro and AUD. So these are strong pairs, strong currencies, and the weaker currencies are the JPY, GBP and CHF. So various things to consider as well, because especially for GBP, as you guys know, I mean, we have to look into fundamentals. Okay, with fundamentals, the biggest news revolving GBP got to do with the Brexit Parliament decisions as well, and various other things. So that has given a bit of a more impact to the downside of the GBP. So we've got weak currencies starting from JPY, GBP and CHF, and strong currencies, as I've mentioned earlier on, USD, Euro and AUD. So now looking at this these three versus 3, you can always mix and match and look into the chart and come up with pairs. So these are the clearest way of doing that. Of course, also with the top movers, I will share with you guys on how we do, how do we actually practically find all these pairs when we analyze the market. Where do we go to look for top movers? Where do we go to look for strengthening pair, weakening pair? Now these are all covered by our in-house trainers as well, and they conduct from time to time lots of lessons, basics of geometric pattern and basics of forex. And this is where we at Blackwell Global Academy actually have all this in store for you guys. So if you guys are interested in knowing getting trained in that, you can always contact your account manager, contact us here at Blackwell Global, and through FX Geometry, we are ready to help you in giving you more training in that area. Okay, so let's get on to it. Now we're looking into Euro USD on the 1 hour chart here, because quite a number of people are looking into the maybe the Euro USD at this moment of time is giving me a bit of a hint of an ABCD pattern. Now I call it an ABCD pattern to the upside, and I will just explain to you a little bit about what it is about the geometric pattern that we have. Now, geometric pattern is a sort of pattern that we convert from a simple ABCD pattern into a geometric pattern by drawing simple lines, okay, or trend line. And by doing that, we can then find best areas to execute our trades, best areas to find support resistance, and various other things. So I'll just give you a bit of an indication here. Now let me just double click that, take that away first. Now some of you guys are quite familiar with an ABCD pattern, so let me just draw that one out for you. We've got it here. Now we're looking at Euro USD. I find a chance or an opportunity of an ABCD. We call it a bullish ABCD pattern, giving you a bit of a hint that there may be some more price action to the upside for Euro USD, but we're still waiting because there's just not enough momentum to push the price up. But we are not that worried as yet because the entry area or whatever has not been executed, because we are measuring our risk and we have found the support resistant area. So now here, as you guys can see, this is the ABCD pattern that we're looking at, and we're starting off with, oops, sorry about that. We're starting off with this point here, which is your A pattern, A right there. This is an ABCD bullish pattern. Then you've got your D area right up there. So we've got A here, and we've got B, you've got C, and you've got D. All right. Now, the reason why I've chosen here to be my A and not anywhere lower or higher, it's because we use Fibonacci ratio to give us a guide on where we should draw, and it all depends on the C point. Okay, so let's just start this way, because how you draw a pattern using Fibonacci is covered extensively in our tutorial section of FX Geometry as well. We have a video, short videos to give you a guide on how you draw these patterns and how you you know, start spotting them. So this will be covered in our tutorial section. And here we start by giving you a bit of a trade idea, whereby we've got a bit of a bullish momentum here, possibly once prices reaches this area here. But let me just move this. Oops, sorry about that. Okay, so let's go here now. You've got all the prices here, and we have got prices now trading at 1.0746. Now, as you can see, there's a bit of a pickup here on the 1 hour chart for prices to go up. Now, this simple ABCD pattern, if I were to convert it into a geometric pattern, I simply use a trend line. But let me just get rid of this. Okay, so if I start off with that ABCD pattern, A, B, C, and then I'm projecting D. So that D is a forecast of where D could possibly or probably go to, around that area here. Now that area there is marked as the PRZ, or probable reversal zone. Okay, so if I start off with my ABCD and I drag from A all the way to D, that has now been converted to a geometric pattern, because that is a perfect square following Pythagoras rules and principles. Now we have got an area there where it crossed. As you can see, once I've drawn the A right up to the D, it crosses out here like a butterfly, okay, or like a funny ribbon kind of pattern. So once we've done that, I double click that line there. Let's say you're drawing a horizontal line, and you just mark that right at the very center. That becomes your probable centroid area. Now the centroid area where it crosses are usually used by geometric traders like myself for relevant entry area. Now when I say relevant entry or relevant trading area, it could be whether it's a long or a short. That all depends on the trade itself. But at this stage, this pattern itself is a bullish pattern. So that should give you a hint on the direction that traders usually take. Okay, so you've got that area right there. Now that has actually marked the 1.0753 area. So that 1.0753 area is a waiting area for a pending possible buy area. But what we usually do is we convert that number that we see, 1.0753, is too close to 1.0750. Now, because it is too close to 1.0750, 50 is one of the psychological level that we should be quite careful in trading at that price. So it's probably best for us to to look into trading it once it reaches 1.0760 instead. So let me just write an example here of a price there. Okay, let's say just as an example, you've got 0760, right? So 07. Okay, I don't think I've got space there. Sorry. And let me just take this one away. Sorry about that, guys. Got a bit of a problem with my mouse here. So let's do that. Now take that away. Okay, so let's say I type that out right here. It's easier. So when we adjust the price based on psychological number principles, instead of 1.0753, we would adjust it and tweak that to 1.0760 for a possible area to trade. Okay, so that area there, the reason why we choose that is because we have adjusted that to the psychological number, and that will also be explained to you guys on the tutorial on psychological numbers. So we've got, let's say, the price there on the centroid. Once you adjust the centroid price, you've got 1.0760 as a probable trading area for traders. Okay, now as you can see, it's on a live market. You've got prices now picking up. The time now is 3:18 p.m. Close to 3:20 p.m. here in Cyprus. So we're looking into the US Open quite soon, or already happening basically, and hence the reason we're looking into a pickup of price to the upside. So this is an ABCD bullish pattern for the Euro USD, and once prices have actually crossed that centroid area, this would give traders an opportunity for a long entry, since it is actually looking into prices or candlestick going to the bullish side of things. So this is where we just wait, and once you're looking at 1.0760 as your probable trade area, you're looking at your PRZ as your probable reversal zone. So your reversal zone, as what most traders use the reversal zone as their TP area too, but here we've got a zone area, so it is entirely up to the traders to look into where within that area to actually exit, and this is entirely up to them knowing how to convert the prices as well to psychological numbers. So here, as an example, 1.0790, it's actually 10 pips below the level of 1.0800, which is an ideal area for a reversal to take place. Okay, so let's say if it's 1.0760 to 1.0790, you've got a 30 pip short-term trade there available, or an opportunity there based on this ABCD pattern. Okay, so that's on the Euro USD 1 hour chart. Okay, this is on the Euro USD. We want to look into the USD CAD as well. So I'll just move on to the USD CAD because the USD CAD is one of the top movers today, moving to the upside. There has been some pattern spotted. I think it was a couple of days ago or even yesterday. We have had quite a number of pattern like the Z pattern as well. But let me just go on to the 1 hour chart. Now here itself, because the top movers are looking into the upside for the USD CAD, we want to always be sure. So one of the ways that I do, I start off with the 1 hour chart and then I move on to the 4 hour chart and then the daily to examine the trend. Okay, so here the trend needs to be really examined properly. So I usually zoom out totally this way, okay, and I look into the most recent movement here. As you can see, it's quite a steep move downwards, and we are looking at 1.3267 at the moment. So here itself, what I usually do is to insert the three moving averages, which is the exponential moving averages. So you've got trend line here, you click on the moving average, you start off with a 50. Is 50 exponential applied to close? You start off with your first line and then you click on insert again, you start on indicators. Okay, I'm doing this step by step. Of course, we've got an easier way to just apply it, but for those who are not very familiar with the moving averages that I use or how to apply them, I'm just going from the start. So you've got 100 here. You can choose any colors, any color you want. So I choose the how do you call that? Light color and then lighter and then a bit darker blue and then very dark blue as my 200 moving average. So that would give you a bit of an idea which line is for which moving average. Okay, so I'll go on with the 200 right there. There you go, and then you go on to there. Okay, so you've got the three lines there, and the way I use these three lines for trend is very simple. When you have got majority of candles above all three lines, that gives you an indication of an uptrend. If majority of the candles are under all three lines, then it gives you an indication of a downtrend. So here, for example, if you've got another thing to notice as well is that if you find candles in between all the lines, they are not above all the three lines or under the three lines, that means it's a bit uncertain. When you are in doubt, you need to stay out of the market. It's probably the best thing to do because it's not giving you a clear signal in terms of trend. Okay, so here itself, as you can see, prices is not really trading above. It's touching the first line here, which is the 50 moving average right there. So that's not a very good sign because it's not giving you clarity of direction of the trend. So let's say if I go onto the 4-hour chart, let's see what's going on here. Now, again, it's pure uncertainty. You've got prices in between all these three lines. So 4-hour is not a chart I will look at. 1 hour, it's also not a good chart I am confident with. And if I go on to the daily chart as well, it's giving me more uncertainty because these candles are not above all the three lines or under all three lines. So this is something that I would do right now is to ignore looking at the USD CAD on the 1 hour, 4 hour and daily because they give me uncertainty. I wouldn't want to look into a chart that gives me uncertainty. I need to look into a chart that gives me clarity. So I will go on to a shorter time frame and look into the 5 minutes chart. Now, the 5 minute chart for the USD CAD as well is now signaling to me uncertainty. Why? As you can see, they're actually coming downwards. Now you've got it trading at 1.3271. Now 71, if you look to the upside, it's close to the 80 site number. 3280 is another site level. But apart from all that, it is trading in between all these lines here, and it's not above, it's not under, and it's not a good chart for me to look at as well for the USD CAD. Even with the trend, it's not that even though it's clear, let's say for the trend, how the candles are dominating, it's not a good chart to look at in terms of time frame or to really waste your time going into it deeper, into analyzing it. So this is how I filter out pairs that I don't need to look further for this time. Earlier on today, it was giving us a lot of great movement. We've got a Z pattern, and it went on really well, and it gave traders lots of great opportunity earlier today and also yesterday. But as of now, it's not giving me a good indication of trend, and it's got lots of uncertainty at the moment just by looking at these candles in the area of the 3 lines, you see. So you need candles, let me just re-explain, you need candles to be above. Look at this one here. Give me a second. You need candles to be way above like this. If you've got candles above all 3 lines, and these 3 lines don't touch each other, they are like trading, you know, freely apart from each other, and the candles are above all 3 lines, that's a good indication of an uptrend. If you've got candles downwards like this here, trading under all the 3 lines, and these lines as well are quite far above all these candles, then that would signal a downtrend. Okay, so the further away these candles are away from these 3 lines, the stronger the trend. Okay, whether it's an upside or downside. So above, remember, above the lines, uptrend, under the lines, downtrend. Okay, so this is it for the USD/CAD. So at this stage, I just want to tell you how you filter out, or how I would actually filter out that and not consider that chart at this moment of time, so we can look into opportunities. So let's look into what's going on with the GBP USD. The reason being, we have got some news about, as I've mentioned earlier on, about Brexit, about Parliament's decision, whether or not you know, there's some uncertainty in the political background of the UK at the moment, just with regards to Brexit and you know, how they're going to go about it and everything else. So that was one of the hot news today with regards to a university professor who have actually mentioned or pinpointed some very important things about the law side of things regarding Brexit, you know, the legalities and things like that. So that has heated up quite a lot. So now let's look into the GBP USD 1 hour, whether or not we've got opportunities. Let's start off with the 1 hour chart and look into how the candles are trading. Okay, so at this moment of time, we have got candles touching this 50 moving average. It may be a good sign if it touches and bounces upwards. That means it found support. When you have got the candles finding support like this, okay, they find support and they bounce up. This is a good sign when they bounce out or bounce off the 50, 100 or the 200 moving average. So here itself, there is some indication of bullishness here for the GBP USD. But let's move on to the 4 hour chart and look into what's going on. It seemed like there are more room to the upside due to how the candles are moving above. But when you look into this these 3 lines itself, it's not really clear. They're touching each other like that, and it's not way apart from each other, pointing upwards. So again, it doesn't really match between how the candles are trading, even though they are above all 3 lines. But you see, you've got more downward move here by the candles itself. So let's go on to a bit of a long term and look into the daily chart, and so that we get a better picture. Now, the daily chart does not give us an indication of a long-term upward kind of trend. It's more, it's favoring the downside due to it finding resistance coming down, and here possibly another resistance. Also with that, not only resistance, it's also giving you some uncertainty because it is actually trading in between at the moment. So you cannot make your decision on trend when you see the candles in between these 3 lines, only if it's under all 3 lines or above all 3 lines. But it's giving you an indication of resistance. It's resisting going upwards. Why? If you look left, you could see more resistance in this area. You look left again, more resistance, and then you've got support becomes resistant, resistant becomes support. Here you look to your left, you can see support here, support, some more support, and then you've got resistant, resistance. So here it may actually mirror that area here for finding more resistance to pull down, but it's probably best for you to wait until the candle, if at all you're looking to the daily chart, for it to come under this area. So we don't have a clear message on selling or buying, or bearishness or bullishness on the GBP USD on the daily chart, 4-hour chart, as well as the 1 hour. So let's move into a shorter time frame. When we look into shorter time frame, let's see what we can get out of the GBP USD. Now here it's a little bit more I wouldn't say promising, but the way the candles are moving, they're under all three lines and it's finding some resistance. But as we speak now on the 5-minute chart, it looks like there's some pickup of price there, as you can see. And you can see that most often you have got the prices moving upwards, but then finding resistance very close to the 50 moving average right there. I think I've got some questions there. Let me just check. Yes, hi Kartigesa. Your question is, should we also look at EMA direction? When you say EMA direction, in terms of direction for the EMA, the exponential moving average, I'm only looking at not really much of the direction. I'm looking at how the candles are trading, whether they are under all the three lines or above all three lines. Like in this case, on the 5-minute chart, we have got candles trying to pierce through, as you can see, right? Now, it's trading at 1.2462, but earlier on, as I've mentioned, they are not well under or well above all three lines, because that is my trend indication. At this stage now, because prices, as you can see live on the live chart now, it's actually just shooting upwards and piercing through the 50 moving average. So it might find resistance at this area, might find resistance at this area, but I must say that it's giving us more bearish sentiment, because when we went onto the daily chart, it gave us more of a possibility there of a bearishness for the GBP USD, but that's for the long term. Now here is giving us uncertainty now on the 5-minute chart. Now for the 5-minute chart GBP USD, because it's actually in between all three lines, it's not giving us a clear direction, and it's sort of tricking us a little bit, thinking that, oh, okay, maybe price could actually go up and there's a change of trend. It cannot be like that, because we're looking at a 5-minute chart. It's just too little data to think of a change in trend, because we go onto the daily chart, it looks like it's the sentiment is more to the downside. But we leave that aside and we start to look into a shorter time frame. Now here itself, once it goes through these three lines, it's giving us uncertainty, because it's still not above or not under. So let's just go on to the 15-minute chart right there. Okay, now here itself, we have got some downward move right there, upwards there, but again, we are looking at most of the pairs now, just starting about an hour, 2 hours ago, starting to be uncertain. Okay, they have started to become uncertain, but we have got a bit of a biasness in terms of which direction, but you need to look into the overall picture by looking at the longer time frame, the daily chart, 4-hour, the daily, to look into which area would it actually be giving you more opportunities for the medium and long term. This is how you look into it. So if I were to look into the daily chart for the GBP USD, and it's giving me more of a bearish sentiment, then I want to look for bearish type pattern. Okay, so here bearish type pattern, meaning that you've got ABCD going downwards. So I will just draw that for you. Okay, so a pattern that I usually draw, it's either ABCD like that, that is a bullish pattern, or I've got bearish pattern like that down. So if the trend overall based on the daily chart is to the downside, I personally as a trader prefer to trade downside or upside based on the long-term trend. So if the long-term trend for GBP USD is giving me hints to the downside, I don't look for bullish pattern, I look for bearish ABCDs. Okay, so let's just do that now. I'll just draw out the pattern, and as we go along, you can always ask me questions. So here we have got an indication, a probable pattern here. Let's say I start off with an A right down to a B, okay? right? So I've got A, B, let's say, okay, and then I've got correction right up here. Now, I don't take that long wick right there because it's not the topmost candle, it's not the peak, okay? So I need to take the B. So I've got B to C right there, let's say, and usually to forecast the downward move, the AB's length, this length, right, could be equal to that length right there. Okay, so then I redraw the first line. My first line is my A to B. My second line is B to C, and then C to D right there. So now I've got the end here is my forecast of my take profit area, preferably area of reversal. Okay, mostly an area for reversal that most traders would take it as a take profit area as well. So it's entirely up to the traders to decide how they decipher that area into what would they use it for. Okay, so this area here, we have got an area there at 1.2430. So this, just giving you an example, this would be a pattern that perhaps I would trade, or most geometric pattern traders would trade it to the downside. Why? Because you are trading from C to D. You've got A, B, C, D. You don't trade, we don't trade the A to B, we don't trade the B to C, we trade the C to D here. In this case, this is a bearish pattern. Okay, as you can see, we have got A, B, C, D, and very close to that area, it actually bounced upwards. Okay, so you see you've got AB's length equals CD. Now, once you've got your AB, BC, and C to D drawn out, you can then convert it into a geometric pattern. And how you do that very simply is to just take the A point and stretch it all the way down to the D point right there, and it will look like this shape here. Okay, so here we go. Now here we've got that potential there where A, B, C, D, and then a geometric pattern, and we've got that crossed area right here. Now we are talking about a move that has already happened. Okay, has already happened. Why? Because the C has dropped down to the D area. But initially, where would I, this is just to demonstrate to you guys how the ABCD pattern okay, or works. So here you have got a an area that you could sell at the centroid area, okay, but you would need to tweak that based on the principles of psychological numbers. So most traders would take that as a probable trading area. Now in this case to the downside, because we have got an ABCD bearish pattern. So 12486 would be adjusted based on psychological number to 1.2470 as a probable area for your trade, and then you would then take profit here at this area here, perhaps at 2430, which is a good area because it's above the 20 psychological number. So let's say you are taking that trade right there, you've been selling from that point right there all the way down to this area here. So you've got a total of about 50 plus pips, about 55, 56 pips right there to look into. So here, because we've adjusted that in a way where we tweak it based on psychological numbers, you are increasing your probability and decreasing or reducing your risk. Okay, so this is quite a good trade, but I must say it's a bit of a risky trade because this trade I may or may not take it, but I would be leaning towards not taking it because we have got prices, candles in between all the three lines. I would like to see, or would look into a higher probability trade whenever you have got a pattern like this happening under the three lines or above the three lines. This is a very important point. Okay, so if you've got a pattern that you have found A, B, C, D or anything like that, and it's actually happening under the three moving averages or above the three moving averages, then you've got a better play. So now what do we do with the ABCD pattern at this moment? Do we have a bit of a trading opportunity? Do we have a pattern here? Now let me just zoom out a little bit. Let's go on to the 1 hour chart right there. Perhaps we go back to the 5-minute chart so we could draw one there and then move on to the others. Now here, because we are looking into the biasness of a downside trading opportunity for GBP USD, like I've mentioned, we only look for ABCD to the downside or bearish ABCD pattern. So let me just go on and zoom out. Now here itself, if I do that, you've got a nice move all the way from here all the way down. Now it's correcting itself. So that could be an A, here B, and that's a C. So we do it this way. Okay, so let's say if I just start drawing A to B, okay, just make it simple. Now we're looking into the visual element, but we will cover in our tutorial on how of whether or not you should pick that ABCD pattern, whether that ABCD pattern is worth trading or not. That will be covered in our tutorial section. Okay, so you've got A, B, and then you've got a C right there. So if I pull my Fibonacci and we go on to that area, you can see that it's quite close to the 61.8 area right there for an ABCD. Okay, so I'll proceed in drawing my B to C. Now just make that one smaller like that. So I've got my A, B, C, correct? Now I usually wait for my C to correct a little bit more because we are not really sure whether or not C have actually stopped at that area and start reversing. So, but this is just for demonstration purposes. Okay, so we're looking into this area here. We'll take that all the way down. Okay, so because AB could be seen as equal in length to C to D. This is the fastest, easiest way to do a prediction on where the D could fall to. Okay, so if you do that right there, okay, and you've got a bit of a projection now. Now that was this one here. We'll just take that away. Take that away. We'll just clear it up. You've got your A, B, C, D. Right now, where would you then look into the centroid area? But first, you would if you do want to look into the centroid area, you would need to first convert that ABCD pattern into a geometric pattern like that. Okay, so then you've got a center point area. Now this is the center point area that would then signal a bearish potential. Okay, a bearish trading potential under this area of 1.2444. Okay, so under that area you would see it, but here, as you can see, is actually trading further upwards. So that C point has not really finished yet. It might extend somewhere there, but there are possibilities of this price going upwards towards the 200 moving average right there. So if I pull this A to the B, I could see that it's quite close to the 70.7 area Fibonacci. Okay, if at all it start reversing at the 200 moving average. So you have got a potential. At this stage, you've got nothing to lose because your point of trigger for a trading opportunity wouldn't be triggered until prices come down, touch this area 1.244 and go below it a little bit, and then you could see your trading opportunity start kicking in, and that's that area here, not this area here, because this is an A, B, C, D. You are trading C to D, but you cannot trade C directly. Okay, so you need an area with high probability and lower risk. And where is that area? That area is under the centroid center point area here. So here onwards, it's your sell area or your potential trading area right down to your PRZ, potential reversal zone, or some traders would look into a take profit area there. So you've got that area there. Okay, so if I were to pull that in terms of pips, once prices reaches this area for your short opportunity, you're looking into 60 plus pips or so to the downside. Now that is if at all the trend for GBP USD to the downside picks up. Okay, so this is how we look into it. So here I would like you to also look into the behavior of the candle. So I'll just direct that like that. Okay. It's a bit distorted, the whole shape, the geometric shape, but at this stage, let's just remove that away. Okay, We'll take that away as well. We'll just start. I'll just draw again for demonstration purposes. That's your A to B right there. Okay, so your C to D could be anywhere from that area of 200 moving average right there, potentially, because as you can see, the prices suddenly have weakened. You see, the momentum, because we've got lots of challenges, meaning the prices are going up. You've got the first challenge by the 50 moving average, you've got a second one on the 100 moving average, and then you've got the 200 moving average right there. So for it to really pierce through all three may be a challenge, but we just need to wait. So while we wait, we don't actually risk our trades, because if you do it on a pending order, you're looking into an ABCD like that, okay, and you're looking at just a roughly right there, okay, and you're then attaching this A to B. So your area of entry would actually be there. Your probable trading area would be based on the centroid, the center point, after you have converted that simple ABCD pattern into a geometric pattern. Okay, so it's very important. Number one is to know the trend. Once you know the trend and you cluster it, or you gather 3 time frame, and you see all the 3 time frame start to match, giving you clear signal of the direction, then you look for the geometric pattern for that direction. If the direction of the trend, or the trend itself, is more to the downside, you're looking for bearish ABCD pattern. If it is more to the upside or bullishness, then you're looking for bullish ABCD pattern. Okay, from the ABCD pattern, it could actually change or convert itself into an M-like pattern, a W-like pattern, and many other patterns. So the ABCD pattern is the base or foundation of all other patterns, but I like to pick 3 or 4 high probability, low risk patterns in order for us to look into the market overall and start trading using geometric patterns. Okay, all right, so this is your GBP USD here. Before I move over to gold, we will come back to more currencies, of course. We are at quarter 2, okay, and we could then go towards currencies that you guys would suggest, and we can then answer some questions as well. Okay, so any questions? I think we've got a hands up or something like that. Any questions, guys, about GBP USD, perhaps, or other pairs that you would like me to look at? But perhaps some questions on the GBP USD first. Whether you guys have got that, how do you look into the ABCD on the GBP USD, whether or not you've understood it right, on how you look into trading areas and things like that. Okay, so any questions on this one before I move on? I think I should move on then, since we've got no questions. Okay, hope that's been clear for you guys on GBP USD. We'll just move into gold. Quite a number of people are wondering what's going on with gold now. If you want to wonder what's going on with gold, it's probably best for you to evaluate and examine the trend for the dollar. Okay, so if you've got access on your platform, it's probably best for you to read a little bit about USD index. We will cover some information on USD index very soon on our academy section of BlackRock Global. Apart from that, I will also have it on FX Geometry website members area for you to understand why we are looking into the USD index. The USD index is not a tradable instrument, but it's an instrument that can be used as an indicator. Why? Because the USD index is a coverage of 6 other currencies. It's a comparison of the US dollar against a basket of 6 other currencies. So that will give you the direction, the strength of the US dollar versus these 6 currencies. You see, these 6 other currencies that are, is dominant in the movement of the US dollar. So the US dollar can actually be seen as an indicator for the gold, because the stronger the gold is, the weaker the dollar, and vice versa. So they are correlated negatively between the dollar and the gold at this moment of time. Of course, correlation cannot last for long. Sometimes it changes, sometimes it lasts for fairly long, but then it's not permanent thing. Okay, correlations can actually change depending on the economy, the economic conditions, depending on many other factors of the world. Okay, okay. So we have got this now. The XAU USD or gold. Let me just start off with zooming in. Sorry, zooming out like this, and you can see that I like looking at this chart without any indicators in the first instance. So I like looking at clock angle. Okay, how do I do that? Is to determine the trend based on the angle it is trading. Look at this angle here. So the angle of this trade, the biggest movement you can see is an upward move like that. Okay, so we start off from the bottom here and we go upward there. Now here itself, this angle, if you look into your watch, it's very close to a 1 o'clock type, between 1 o'clock to 2 o'clock. If you picture this yellow line that I've just drawn, this yellow trend line, as your the hand of your clock or the hand of your watch, then you can see that it's quite steep, because 2 o'clock will be somewhere here, 3 o'clock of course in the center, 12 o'clock is right there, 6 o'clock right here, 3 o'clock right there. Okay, so here it's quite steep, meaning it's giving us a bit of a bullish sort of angle, okay, based on the 1 hour chart. So let's just go further now. I'll erase that first and go to the 4 hour chart. Now, 4 hour chart, as we zoom, you need to zoom out as best as you can. You can see that that angle there is rather steep to the upside, so it's giving us some hint of a potential bullishness starting to pick up right there, that smaller move there. But the bigger move right there, if you draw a line from the very top right to the bottom there, it's not a 6 o'clock type angle, but I would say 5, but it has corrected itself quite nicely there. So this is giving us a bit of a hint. Now here itself, I just want to share with you, there may be a potential of a Z-like pattern here. Okay, now we will cover all these patterns in the FX Geometry membership area. I will give you some basics in the academy area of Blackwell. So this is how we collaborate between FX Geometry and Blackwell Global, and this is where we guide you on all the basics in Blackwell Global's academy, where this is catered for beginners. So you get all the beginners lessons and videos and a couple of other very interesting tutorials there, so that you can self-prepare and watch the videos and read and get yourself prepared on the basic level foundation before you could go into the members area of FX Geometry, which is catered for intermediate and advanced level. Okay, so here we've got a Z-like pattern. This Z-like pattern signals a bit of a correction to the downside here once it ends about 50% of this level here. Okay, so if I label that as my A right there, and then we've got B right here, and then we've got C, we've got D. Now D is what had happened now. It may begin to come down, but then a lot of you may ask, oh, I thought the dollar is actually weakening or not, but the gold is going up. Now the thing is that it's not about going up or going down. It would need to be two things when it comes to gold. Okay, it would need to be the position of the dollar, what's going on in the States, because that would then decide the price of gold. Secondly, it's a matter of timing. Okay, so if you hear gossips out there, oh, gold's going up and things like that, you need to ask yourself on when that possibly would actually happen. Now that needs to be done from your end. You need a mentor, you need an educator to actually guide you through using different tools so that you know the exact trend. There is no exact trend, but the most probable trend for that pair. So here we have got gold on the 4 hour chart. Now usually what happens in a Z like this is a bearish pattern, meaning that once A to B, B to C, and C to D is completed around there, there's a downward fall. That's why it's called a bearish Z pattern. It does look like a Z. So here, if I erase all drawings and take that away, you've got that Z-like there visually. Now, it's not a very nice Z because a couple of areas, a couple of criteria or rules are not actually met. So this is not a very good Z-like pattern. So it may not actually be bearish after all based on the pattern analysis, because the other criteria is for this area to stop at about 50+%. So now it's very close to the 50%, and if we go on and zoom in, you can see it's challenging that area right there. Okay, so whether or not it may come down, if at all it does follow this Z-like pattern because due to US dollar strength, then the downward move usually is another 50% down. So if you guys are asking me based on the patterns analysis how much gold could actually fall a bit more, based on the Z-like pattern, the probability or possibility would be about 50%. So that is actually quite close to that area here, and that area there is marked as 1171.30 area. So this is the worst case scenario. If at all it's going to strengthen much more for the dollar, and all the inflations taking place in the with the US and the dollar and all that, then you've got more rise to the dollar. If it does have got more rise to the dollar, then you're looking at more fall of gold. Now this is, of course, we're looking at the 4-hour chart. Okay, now here the other thing I would wish to share with you as well is there is another pattern that have actually sort of given me a bit more support, that you may be expecting more fall of the gold as opposed to the rise. As of now, this is just talking about up to the 4-hour chart. Okay, is this pattern here, which is another Z pattern, but it is a bullish type Z pattern. So here earlier on I've drawn a bearish type pattern, and this is a bullish type pattern. How? Because if I start off from here, okay, let's say from there all the way down and all the way up here, okay, somewhere there, and there may be a potential again. Now this length of AB is usually quite close to the C to D length, so that would then help you forecast that area there. Okay, AB equals CD. So let's do that very quickly, just so that we're aware that we shouldn't be overexcited with news out there telling us that gold is going up, but big question is by when or when. Okay, so this is to give you that indication that perhaps it's correcting itself first before it actually goes up. But the good thing about it as well is that when you are looking at a Z pattern coming downwards like this downward move from C to D usually does actually happen in the form of an A, B, C, D pattern. So you are most welcome to trade the C, D of this ABCD pattern, and you just convert that into a geometric pattern, and you can trade that downward move from C to D to take advantage of that move based on that pattern. And then once it actually reaches upwards, then you're then trading to the upside once it becomes bullish. Okay, so let me just draw lines here. Let me clear off this first, and that Z pattern would look something like this. Okay, that's your A to B. Okay, so your A to B would be roughly close to the C to D area right there. Okay, so that's your C to the D. I'll take that one away. Okay, we'll redraw that one right there. So you've got your AB equals CD, right? This is a potential Z-like pattern, a bullish Z-like pattern, but we are expecting a fall first, I think, before we see upward move. But that is sort of backed up by dollar strength as we are looking at this moment of time. So as we go on like that, you've got an A, B, C, D on gold based on the 4-hour chart. So we are expecting a fall, potentially very big fall there, 1163. Okay, so you've got a potential there, but again, as I've mentioned earlier on, it may come down as a shape of an A, B, C, D. So traders or investors may get a little excited later on looking at it falling like this, but then picking up. Okay, and then coming downwards, right? That picking up may actually excite some traders and investors in the sense that they would think, oh, it's a change of trend. But as a patterns trader, we are able to look into a bit of a bigger picture of what may actually go on. Not something that for sure will actually happen, but there are probabilities. Hence the reason we need to use lots of tools, and that tool does actually include various other indicators, one or two indicators that I use to actually confirm firstly the trend, as well as to look into diversions as well. But one of the biggest, most important tool that I use is the Fibonacci tool. Okay, so here, because there's quite a number of gold traders out there, as I know, and they've got lots of questions about it, so I'm just covering this area here. So we would like to look into pulling this B2C using a Fibonacci, aiming it at the 50%. So your 50% is right there. Okay, so let's just also pull the Fibonacci from here all the way down. You can see that that move there is around the 161.8 area, which is one of my favorite Fibonacci ratio. And the 50% is down, is up there, and then you've got the AB equals CD. So you've got a bit of a zone here. So this is a zone that I would like to mark as your potential reversal zone, or your PRZ right there. Okay, so what does that mean? That means that it could come and aim this area, but then reverse, hence the reason it's called a potential reversal zone. So this is for traders out there trading gold. Be aware, look into the strength of the dollar. I know there's lots of news and other sources out there are just giving you the potential for gold uprise, which may actually come through. But the question, again, as I've mentioned, is time. Okay, because you've got lots of people out there, especially in the States and a couple of other countries, where they trade gold in huge amount. Okay, we're talking about in millions or so. So for them, they can actually afford to look into the long term. So for the long term, maybe that is what's going to happen. We've got more potential, what you call that, factors that would drive gold going up. But we as traders, retail traders especially, it's best for us to trade in stages. Okay, so now if we are looking into a potential downward move, you could then look into other areas right here, where you go into a shorter time frame and look into bearish ABCD, because the trend overall is on the downside, so you're looking at bearish pattern. Okay, so that's my coverage on gold. It's best also to, you know, even for gold or any instrument at all, to apply the 50, 100, and 200 exponential moving average, so you get an idea of how the price, the candles are respecting these areas. Are they bouncing off these moving averages or not, you know, or are they under all three lines, are they above all three lines? So that will give you a better idea on the price play with the trend or the current trend. Okay, all right guys, I would like to open this session now to you guys, and share with me what you trade, and let me know if you've got any questions or would like me to draw patterns for you on the currency pairs that you trade, or even gold, oil, or silver. Okay, this what do you call that, pattern analysis or geometric patterns could be applied on any time frame and on any instruments. That does include stocks, equities, or anything that you can see the chart moving, especially with your candlesticks. That would be a good source for you to apply these patterns sort of studies. Okay. All right, no questions at all, guys? Any questions at all? What sort of pair would you like me to look into? Let's just see. We've got one coming up. There's a question here. All right, Alvin, how are you doing? Good. So Alvin says, hi, Kenny. So if long time frame shows downtrend, in short time frame, look on bear ABCD. More or less, yes, Alvin. I'm not saying that is for sure what you should be doing, but that would actually decrease your risk and increase your probability. Okay, the reason is there are traders out there who are also trading anti the trend for the short term. You know, like you know, you want to trade a little bit anti the trend, and then you trade as the trend comes back, you then ride the trend. Yeah, it's no harm at all. It's all about the risk element, you know, of how much you are wanting to safeguard your risk. You need to also look into your equity. You need to look into your, you know, how close you are your account to your margin level, and your stop out level. You know, sometimes it's best if you are trading small amount, let's say 1,000 below, 500 below. It does depend on what you trade as well. So if we're talking about gold, then it would be very risky to have, you know, small equity like 100 less or 100,000 less. Then you would want to increase your risk averseness. You know, it's your risk aversion, very important. So in this case, it does depend on your equity, depend on which time, how high your probability is. So all this thing about probability will be covered in the tutorial section of FX Geometry on how high a probability, or how should you consider which pattern to enter or not enter to trade. Okay, so yes, in short, the time frame, it's best for you to look at bearish trend, bearish ABCD, bullish trend, bullish ABCD would probably be good, because then you are making the trend your friend. Okay, weekly, daily, the thing about the long-term time frame, Alvin, is that the long-term time frame has got more data meaning more reliability and more clarity. Okay, of course it's the long run and all that, but if you can actually match and see, just a bit of a tip, if you're looking into the daily chart, the monthly chart, the weekly chart, and these three charts are showing you very, very strong uptrend or downtrend, they are all above or under the three lines, very nicely trading, and then you go to the 4 hour, again is matching you know, the trend, then you've got a nice feel of a strong trend coming, or more room for you to trade using that direction. So yes, in other words, it's best for you to look into the trend in a longer time frame, but not to trade that time frame. That is for your trend indication, for you to look into the longer term, bigger picture. Okay, so the time frames are exactly like going into a building and the floors. Let's say M1 is your first floor, M5 is your fifth floor, H4 is your 40th floor, the monthly chart is your 100th floor. So if you go to the 100th floor, you can actually see a better picture of everything, the whole city. Okay, better than if you go to the first floor. So if you go to the first floor, what you can see out of the window may not be as big a picture as you would see on the 100th floor. Okay, so that is why we want to look into the bigger picture, get an idea, and look for the trend, look for the pattern that would coincide or match with the trend that you're looking at. Okay, all right. We also have got Gunnison. How are you doing? Gunnison says, may I know about USD JPY trend today? Of course you can. Let us look together. Now, USD JPY, I think I've got it open there. Okay, let me just remove all that here. Let's look into USD JPY. I'll start off with the 1 hour chart first. I'll get rid of the one click thing, and let me just clear off some things here, guys. Okay, so here we go. Now, what I do first, I zoom out to the max, okay, like this, Gunnison, okay, and I look into what's happening. You got USD JPY string all to the downside at the moment. You've got a nice angle here going downwards like a 5 o'clock, and then this smaller here is looking into a 6 o'clock. So we're looking a bit on a downward side momentum based on the clock angle itself. But let us insert the indicators. Okay, I'll start from scratch indicators so that those of you can actually pick up on how you apply these indicators. 200 moving average, dark blue one there, and then we go indicators again, trend, moving average. I put in as 100 right there, slightly lighter blue. Okay, so you can differentiate between the two. And indicators again, trend, moving average, and then we start off with the 50 and put that as the lightest color close to white. Okay, there you go. So you've got your 3 lines right there. Now, here, if I look into the trend, as I've mentioned, the trend angle is pointing to the downside at the moment. It may be stronger to the downside for the USD JPY based on the 1 hour chart. But as we zoom in a little bit, you can see it's finding resistance, and yes, it may have a bit of a trend to the downside. So here itself, if I were to be if at all I have looked into the fundamentals and follow my trade plan and analyze the trend, and if the trend for the USD/JPY is strong to the downside, then I would like to look for ABCD to the downside. That means bearish ABCD. So here, for example, very quickly, I've got an A to B right here, let's say, okay, and then the B to C right there, okay. It could also be an A to B from here, A to B, B to C, okay, and then you take the A to B and put it right there, and you have got an area that you would forecast the price to fall to this area here. Now, this is based on the 1 hour chart. So we're looking at the price projection at 111.91. Okay, but an area, probable trading area, could only be seen better based on a geometric pattern. So we want to convert this one into a geometric pattern by pulling this all the way from A to D. Then we look into the centroid area. As you can see, the price now is only at roughly 113.15, but the centroid area or the trading area, it's only at 113.01. So it's best to wait till price fall further, go under 113.01, and then it would pose some trading opportunity for you to the downside. Okay, so here you are looking at a potential from that pattern, that area onwards, downwards. You've got about 100 pips or so to look into the downside, but this is when price have actually match with the trend. The strength of the trend must be to the downside. Okay, then prices go under the centroid, the center point area, then you could see that it's got more potential to the downside. I hope that's clear, Ganesan. Okay, that's based on the 1 hour chart. So thank you, Alvin. Most welcome. Thank you very much. Okay, so for Ganesan, we've got this USD/JPY, as I mentioned. That's your trading opportunity to the downside only if prices. Now, for now, it is looking to me as well that it's got more downward sort of momentum for now, based on the 1 hour chart, because we've got bearishness there, you've got resistance right there, and it's giving us some momentum. But it could just bounce off from here all the way up. So that's why I want to look first, wait and see until prices go under 113.01. Only then it gives a bit of a momentum to the downside. Because if you look at this line and you look to the left, you could see you've got some support here. You need to look for some very, very how do you call that, strong support very close to this line here. You've got strong support here, right? So let's see. Now, based on that line, based on that line there, 11301, and you have got some support here, as you can see. You've got support there, you've got some very strong support area. I want to look into support area because the sellers need to go through any strong support area first. Okay, it needs to go through it. So I want to look for support. You've got some resistance, selling point right there. Let's see whether you've got any strong support based on the 4 hour chart. Let's see. You've got something around here. You've got something around there. Support. So let's say we have got an area that we marked here and we marked here. Now that has got some support, got some support in that area as well. You've got some support in that area as well. So now we go back to this area. Now here you could see, okay, I'll go back to 1 hour chart. Okay, there you go. So we just close it a bit. Yeah. There we go. So these lines that I've actually drawn, that you've got the center point right there. As soon as prices go under that center point, then you've got more bearish momentum. But again, in this area here, it's also got some support area here at 11260. So as soon as it does go past through these three lines, 1, 2, 3 lines especially, then you've got a higher probability area here for price to just fall much more to the 111.91 area. So we just have got to wait and see whether or not prices would find support and bounce up, or would pierce through and come through. If you've got a bearish candle that is long, like this one here, bearish candle, and it pierces through this zone, then you've got a better probability for prices to come down here faster. So the reason why we draw lines like a zone, okay, made up of two lines, like a zone or something like that, when we do a support resistance drawing, is we don't want to draw a single line for support resistance, because that is actually not an accurate way. We need to draw a zone, okay, based on the body, based on the wick, and then we get a zone. When you get a zone and you got long candle piercing through the zone, then it means that that candle has the capability of bringing all the sellers to reach your target area here. Okay, that's what it means. So the long candles are a signal of how strong the momentum is. Excuse me for that. Okay, so that's basically it. Now we've got USD JPY covered. I hope that's clear, Ganesan, on that, and I'll go on to 4-hour chart. And if you go into the 4-hour chart, you could see a bit of a different picture there as well. Okay, so you need prices to come down and come through this area as well, because we have got very strong support area here. So yes, short term, perhaps you got a bit of a correction of a how do you call that, selling or bearish opportunity. But overall, based on a 4-hour chart, we have got area of support you need to watch out for, because if it does, let's say on a big time frame, does support here and comes up, then this might actually confirm a cup, an upside down cup pattern. Okay, this upside down cup pattern might actually go up like this, okay, come back down, and then go back up like this, and then all the way down like this. Now if it does come down from this area here, this is the mouth of the cup. If it does come down, then the distance between the cup here, okay, the mouth and the bottom, and this would be almost the same. That means it can come down after it comes down lower than 111.19, this area here. It can actually come down the same number of pips as this mouth of the cup to the bottom. So that's it. So if we let me just do that. That means you're looking at a fall of the USD JPY of the 4-hour chart later, obviously, at least, let's just see, from there to here, we're looking at 600 plus pips, and we're looking at that as a possibility if at all it follows the pattern. So the pattern, it needs to actually follow through, coming down first. When it does come up, it'll come up at least 50% of the cup area. Okay, 50% of the cup area. So 50% of the cup area, and then it starts to make that 50% there, correction, and then come down, and then come down a little bit and go back up to where it found some resistance there, or previous support, and then back down. So that's the classic book example of your upside down cup and handle pattern. This upside down cup handle pattern is a bearish pattern, but we're looking at a bit more room downside. So that's why we want to look into the bigger picture, whether or not USD JPY will make the downward move to this area and then rally upwards. If it does at least 50% of this cup area, then it starts to come down, then you know that it's building the handle. This is the handle of the cup, the handle of the cup area, okay, and then all the way down. All right. So this is what we're waiting for. If this does actually happen, then it might then pave a way for gold traders to look into further appreciation of gold prices. But at this stage, we trade in stages, so we want to follow stage by stage what patterns are they available from short, medium to long. Okay. All right, guys. It's already at 4:18 now, so I would like to invite more questions. If you guys have got any more questions for the pairs that you trade, feel free, so you can get an idea of a pattern that I have spotted for your pairs that you are looking at or trading. Okay, so I'll just erase these ones here. Okay. Any other questions, guys? I mean, we are going to be looking at a bit more advanced areas on Thursdays. I'll give you screenshots on Thursdays on how I look into the top movers and give you an example of top movers, give you an example of how I look into volatility chart and a couple of other things. So this is just a warm-up sort of session to give you an idea how I trade based on geometric patterns. But of course, if you guys are eager to learn on how to trade based on geometric pattern or what is geometric patterns, we have got loads of videos going to be made available to you for Blackwell Global clients only, and this is exclusive for Blackwell Global clients and students of fxgeometry.com. Okay, so let's see, we've got some more questions here. All right. Most welcome, Scanison. Okay, so if you guys have got no more questions, I mean, feel free to also email me at kenny.simon@blackwelltrader.com. Okay, you can get me there, or kenny@fxgeometry.com. Okay, so we have got, you can feel free to come back to me and ask questions via email, or you can get in touch with your account managers. They'll be very happy to help and come back to us here, even going back straight to the support of blackwelltrader.com. So guys, no questions. If no questions, I would then end this session here, and I'll be sending out the link for Thursday. We've got Thursday, same time, another session, and once the FX Geometry site is up and running, you'll be looking into having this form of live trading, more instruments, of course, more trade ideas for you, short term, medium, and long, and that will be available via FX Geometry every day. So every day I'll be doing that, including Sunday, because Sunday it'll give you an idea of what would happen, what sort of patterns that has been spotted for the week ahead. Okay, let's see. Questions? All right, thank you, Ganesan. Okay, guys, in that case, no questions. I would like to thank you, guys, for your participating, in this session, and we'll see you again on Thursday. Now, take care and goodbye.